welcome. You're watching The Money Show. I'm Kavita Thapliyal, and on this show, we talk about various investment strategies which are aligned with your financial goals. And let's begin with a very special initiative. The beginning of the month often marks key financial activities, salary credits, bill payments, and planning expenses. But just as we plan for our expenses, it's equally important to plan for our investments. To encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh, Behtar Nivesh, Behtar Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. As part of the campaign, we are observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones. And today on Bharat Nivesh, we'll be talking about STP. That's right, systematic transfer plan. Now, how does your investment strategy gets better, or how can you plan it better? That's the thing that we'll be discussing via STP. And for that, I have with me Samir Shah on the show as an expert who will be helping you and taking you through with all the processes needed. Hi, Samir. Good evening. And let's break this down. We've spoken about this a zillion times on the show via viewer queries and with an elaborate topic as well. But then today on Bharat Nivesh, since we are simplifying investments and especially investments in mutual funds, what exactly is a systematic transfer plan?
Kavita ji, thank you so much for having me today on your show. If we talk about STP, uh, many investors, they are aware about what is STP, but unfortunately, they do not use STP fully. So when it when if I have to brief what is STP in a simple language, I would say that investor first investor are investing their fund into debt side fund, let's say maybe liquid or ultra debt side fund, and they transfer money gradually and systematically from that fund to equity targeted equity fund. That is that is a simple explanation of STP. But I would suggest when generally what we have seen is when investors are having a lump sum amount of money for investment, and they are unsure about where to invest. Is it the right time to invest? What kind of and if they are expecting a short-term market volatility, in that situation, generally we suggest to take a STP route where they park the lump sum amount into liquid fund, and gradually, systematically, and in disciplined way, we transfer certain amount from liquid fund to targeted equity fund.
Interesting. Okay, so I just want you to help our viewers understand via an example as to what should be the ideal process of doing an STP. Since we know that you can put money in installments via STP, but then for that also there is a process, there are formalities, there are different ways in which you can do it. So how would you like to explain this?
So, Kavita ji, here investor has to follow a simple 5-step process. First, the first step towards that is choose a right source fund. Right source funds means where he is investing initial amount of funding. Say when he is starting, when he is investing fund, right? That for, while choosing the source fund, he has to investor has to keep two things in mind. First, that money has to be safe, and it should generate a stable or a steady but small but a steady return. So here our suggestion is always start with park the money into liquid or short term debt fund, where money are whenever they are investing, investments are safe as compared to equity, and it generate a small but steady return. Now, second step towards SIP is decide the amount and frequency of transfer. Here, what we ask investor to do is choose how much money he wanted to transfer and how often he wanted to transfer. Generally, he can transfer fund on a weekly basis, monthly basis, or as and when whatever frequency he decide, he can transfer money from liquid fund to equity fund, source fund to target fund. What really matters here is staying regular. Say if what we have seen is when markets are volatile, we have seen a lot of customer get panic, and they stop their investment. So our Suggestion is like no, they have to steady in terms of invest while doing STP. Third step towards STP, like no, selecting starting STP is select the right equity fund. Uh, this is the fund, like no, this is the final fund, the fund where you are transferring all the money, and which will remain for a longer period of time, right? So choose equity fund that matches the time frame and comfort of the investors. If customer has a long term view, he is a very active investor, and his horizon is more than 15 years. In that situation, he can definitely go with a small or mid cap fund. If customer is conservative, then in that situation he can select a large cap or aggressive hybrid fund. So based upon his risk taking appetite, he should select the fund. The fourth step towards starting SIP is like no, he should observe the plan without getting emotionally attached, without getting engaged emotionally. See here, market, like no, when we talk about market has a typical behavior. It may go up or may go down. The volatility is the second name of market. In that situation, like no, if you have started STP, and in first month you have seen like no, market has gone down by 5%, you should not get emotionally attached or concerned about like no, what kind of movement market is showing in short term to near short term. In that situation, he should like no, just wait and watch about like no, he should observe the process, like no, where like no, in case SIP is like no, suddenly market rise, he should not increase the SIP. In case market is going down, he should not stop the STP. So the purpose is like no, without getting emotionally attached, he should wait patiently, watch what market is doing, what how funds are getting transferred from liquid to equity. And the fifth and last step is like no, he should have a clear plan from the beginning. So here, a clear plan means like no, he should before starting STP, he should decide when it will end. It could be basis on few months, or maybe a few days, whatever he decide. Second is like no, he should have a the second strategy is he should be certain about like no, certain kind of mix he achieve in his portfolio. So like 50% in debt, 50% in equity, or 60-40, whatever ratio he has set. Once he achieved that goal, in that situation, he can stop the SIP. And the third and very important is like, if investor has achieved his financial goal in that situation, he should stop the SIP. But uh, he should have a clear exit plan before like now starting an STP. See, when investor follow this five simple step with discipline, I am sure like no, STP become a smart way to grow wealth slowly and safely. So I suggest this STP is a really good method of investing, rather than like no, going directly in investing directly through lump sum. He should like no, investor should definitely opt STP. In that situation, he can take the advantage of market volatility.
All right, Samir, but then what about the tax angle out here and tax implications? How can one take care of that and understand it first?
So, Kapta ji, when it comes to taxation part, generally say when customer is withdrawing from money from the debt side. So as per the taxation, right? As per the taxation, debt side, on the like, when it comes to debt side, debt funds, like whatever gain he has earned through this movement, it will be charged as per the income tax rate. Suppose the income the investor is at 20% slab, then he has to pay 20% of the gain to pay as a income tax.
All right, got it. Any ways around to make more return by SIP, STP, sorry?
Yeah. Certainly, Kavita ji, there are four different strategy which an investor can definitely try. First is like no, the reverse STP, where like no, where like no profits like no he can move back from equity to debt. So here what the this is the completely opposite of the traditional STP. Uh, in traditional STP, we park or we invest from liquid to equity. In the reverse STP case, like no, he like no, investor are like no moving money from equity to debt side. Like no, say if investor has accumulated a sizable corpus in equity, and he's about like no he's very closer to his goal in that situation, rather than like no waiting for a goal to attain, he can simply like no start moving some bit of profit from equity fund to debt fund. The second strategy he can definitely use is the swing strategy. In uh, this strategy uh, this strategy is like no adjusting transfer based on the market movement. So generally in swing strategy, the transfer amount changes with the market. If market falls, you can transfer a little more, and if market rise a lot, in that situation, he can like no investor can decide to transfer a less amount of money in equity fund. By doing this, like no, there are he can take the advantage of price fluctuation, and he can accumulate more unit. The third strategy is a trigger based STP. In this method, like no, an investor will decide the rule at the time of starting his STP. Say like if market falls more than 2% or 1% or 5%, whatever he decide, based when that event get triggered, that point that day, like no, the fund will get transferred from liquid fund to equity fund. So this is generally this is trigger based SIP, and this will definitely give uh, like no if customer is investor is using this method, there are possibility whereby he can accumulate more unit as compared to the traditional STP. And the fourth STP is the twin SIP, where like no using two fund for better balance. Say like uh, he can start with investor can start with hybrid or balance fund and slowly move money from balance or hybrid fund to equity fund. This way, like no his his money can spread across two different type of fund, and this will reduce the ups and downs and gives a smoother investment experience. So this are the like no this is these are the four unique STP ideas which can definitely like no give more control and smarter way to handle market.
Absolutely, and this brings us on the in the end of SBI Bharat Nivesh, our very specific segment also. And let's take a short break. And Samir is there with us, and post that we'll be talking about your portfolio queries. And just in case you want to send across your investment related questions, you can do that on a WhatsApp number that's flashing on the screen.